Our lease schedule is now complete and we have everything we need to make our subsequent monthly journal entries for this equipment lease. We want to make this as easy as possible each reporting period, so let's look at that now. We'll create a new tab and call it Periodic Journal Entries. And as with every other worksheet, we'll add a header. Let's copy it from the lease list. And we'll update the subheading to Periodic Journal Entries. Now we need an input for the reporting date, so we'll create a section. Let's grab a header from the About tab, and we'll call this Journal Entry Information. Then the only item we need here is the reporting date. Our first reporting date will be December 31st, so let's add that. And this will be hard-coded, so we'll give it our blue background. And now we're ready to create our journal entry. We'll create a periodic journal entry for each active lease. You could combine all the leases into one journal entry, but I prefer separating them. First, because leases may be at different legal entities, in different segments, or maybe need to be entered in different subledgers for any number of reasons. And second, separate entries improves traceability when auditing or reviewing a specific lease later. So we'll add a section for this. Our journal entry list will need 5 columns. And we'll name this Journal Entry List. Now let's add what we'll need to calculate the periodic journal entries for our equipment lease. The first required item is the lease identifier. For our equipment lease, this is 1.0. And this will be hard-coded, so again, the blue background. Then this will exist on a header line where we'll also have the lease classification and lease name. We'll use an XLOOKUP to pull in the classification. So we'll look up the identifier, find the classification over here in column K. We'll just return nothing if it's not found. The match mode will be exact, and we'll search first to last. Then we can lock our cells and copy the formula over to pull in the name from the lease list. For the lookup value, we only want to lock the column. We'll copy and paste the entire journal entry for additional leases, and we want that identifier cell reference to move with us. So we'll just lock column E, then everything else we can lock completely. Now if we copy this over, we just need to update this to the lease name column, which on our lease list is column C. So let's just update that manually in our formula. Okay, now we can begin the journal entry itself. I'll give this top row here a different background color. On the left here, we'll add the date, which is our reporting date, and we'll lock that. Anytime we copy this down for a new lease, we want to keep linking back to our reporting date. Then let's align this to the left and bold the date. Then we'll add a journal entry description, something like monthly ASC 842 lease accounting for, and then concatenate with our lease name. And to make this a bit more readable, let's increase the row height of the header slightly and align that text to the top. Let's also try changing the background of these cells to light gray. Yeah, I think that looks good. So now we can build the journal entry itself. But before we do so, we need to briefly discuss the mechanics of our accounting. In a way, you can think about our lease accounting each month requiring 2 different but related components. On the one hand, we need to remit our cash payment to the lessor, and on the other, we need to perform all of our ASC 842 accounting. Now you could go about the journal entries in many different ways, and the specific process will depend on the organization and responsibilities on your accounting and finance team. It's possible you're the only finance individual at your company, and you'll be both remitting the cash and performing the ASC 842 accounting. But maybe the organization is much larger, with a dedicated accounts payable department separate from the accounting team. Ultimately, how the responsibilities fall in the lease accounting process depends on your situation. For our purposes, we'll assume we have an accounts payable department that will remit the cash payment to the lessor. and then a separate accounting team responsible for the US GAAP treatment of the lease. So our process will look like this. Our accounts payable team will make the cash payment to the lessor each month and code the payment to a clearing account on our balance sheet, which will be account 1300-9999 and named ASC 842 Clearing. It will then be the responsibility of the accounting team to accurately clear that account and record the ASC 842 accounting as part of their month-end close process. This has the advantage of making it very obvious when something isn't quite right. Once the close process is complete each month, the balance in that clearing account should be cleared to zero. If it's not, we as an accounting team need to do some investigating because something is wrong. Maybe there was a variable component of the payment we need to handle, or maybe the payment amount changed in a way we weren't expecting. Whatever the case, this process will make it clear that we need to take a closer look. And finally, let's now discuss the timing of the cash payments. As we built our lease schedule, we implicitly assumed each payment would be remitted on the last day of each month, made in advance for the next month. But it's certainly possible our accounts payable team remits payment on a different day. Maybe you run payments once a week, and the lessor payment happens to fall on the 26th of the month instead of the last day. This is completely fine, and we don't have to concern ourselves with minor differences like this. The fact is that we need to build our ASC 842 schedule as of the commencement date, well in advance of remitting our future lease payments. So yes, technically our interest calculation would be slightly different in a period if we calculated it on the opening balance for 26 days instead of 30 or 31. But this is a trivial difference, so small there's no instance in which it would ever be material. If for some reason we fall behind on our lease payments for 3 months or something, maybe we're having some liquidity issues, that would be a different story. We'd need to re-examine our lease liability in that case. But under normal circumstances, our accounts payable team can remit payment as they need to, coding the payment to a clearing account, and our accounting team can then clear that account with the ASC 842 month-end process. Okay, so with all of that covered, we're now ready to create our journal entry, and hopefully this reinforces the process I just narrated. So the first thing we know is we need to clear our clearing account for the lease payment. So this is account 1300-9999, and the name is ASC 842 Clearing. And the default for this will be a credit, so we'll indent the account name. Next, we'll record our interest expense for the month. So we haven't seen this yet, but that is account 7200-0001. And the name is Finance Lease Interest Expense. And this by default will be a debit, so we'll leave the formatting. Next, we need to debit our equipment lease liability to reduce it. But remember, we also need to handle the current and long-term split. Since the portion of each payment allocated to principal increases over the life of the lease, generally the current balance will also gradually increase until the final 12 months of the lease term. So the typical entry will require a credit to our current lease liability account. So we'll copy this down for formatting. And this is account number 2300-1000. And the name is Equipment Lease Current. It won't always be a credit, especially in the last 12 months of our lease term, but we'll default to that. Then next we need to debit our long-term lease liability. This will be account 2600-1000, and the name is Equipment Lease Long-Term. So the net effect of our current and long-term amounts will equal the overall change in the lease liability. And finally, to complete our journal entry, we'll add the amortization of our right-of-use asset. So we need to debit our amortization expense. Precision's account number for this is 7100-0001, and the name is Finance Lease Amortization Expense. Then we'll credit our accumulated amortization account for the same amount. That is account 1400-1001, and the name is Accumulated Amortization Equipment Right-of-Use Assets. So to recap, we're allocating the payment made in advance of January 2026 that we will originally code to our clearing account into an interest portion that flows to the income statement and a principal portion that reduces our lease liability, with the principal portion separated into current and long-term amounts. Then we're amortizing our right-of-use assets separately, as we do for a finance lease under ASC 842. So now we can pull in all the numbers from our lease schedule. For the clearing account, we'll need to clear the lease payment, so we'll use an XLOOKUP. We want to look up the journal entry date. The lookup column is our date column on our lease worksheet, column G here. We want to find the lease payment, that's in column H. We'll return 0 if it's not found. We want an exact match, and we'll search first to last. Now we'll format that as a currency, and then let's lock our cells, and we can copy this to our interest expense. The only difference here is that the interest is found in column K, so let's go update that manually. Then we'll skip the liability changes for a second and copy this interest expense formula to the amortization expense. And we find that here in column R. And then our change in the accumulated amortization will simply equal our amortization expense for the period. Now we need to calculate the changes in our liability balances. To do this, we'll subtract the balance in the prior period from the balance in the current period. And I think this is easier with an index match. So we'll say equals index. We want to look in our current liability here, column N. Then we want to match our journal entry date. And we want to find that in our date column, column G. And we'll look for an exact match. So you can see this is pulling in our current liability balance as of December 31st, 2025. Now we need to subtract off the current balance from the period prior. So let's simply copy this entire index formula here. We'll subtract it off, and the only difference will be we'll subtract 1 from the match formula, which means we'll find the row of the reporting date and then subtract 1. And then finally, let's wrap this in an NA formula so that if there is some sort of error, we return 0. So just to highlight this, if we do some scratch work here above our current balance, you'll see if I take our current balance as of December 31st, 2025, and subtract our current balance from December 1st, 2025, I get an increase in the current balance from December 1st to December 31st of $453.73. That's exactly what our formula in our journal entry is calculating. It's just doing so in a bit more dynamic way so that when we update our reporting date, this will update automatically. So let's go delete our scratch work. And now we can lock our formula and copy it for our long-term balance. And the long-term balance is simply one column to the right of the current balance. So we'll just manually update our column N to O. And because our long-term balance is decreasing, this will be a debit, so we need to flip the sign of this one. And at this point, our journal entry should balance. Hopefully it does. Let's add a proof here to the bottom, and we'll sum up our debits and do the same for our credits. And sure enough, the two do match. Now let's finish this by just cleaning up the formatting a bit. So we'll give the journal entry rows themselves a white background. The proof, maybe that light gray background. Let's add a border around the entire entry. And maybe we'll bold this identifier as well. Okay, that looks pretty clean. The last thing we'll do here is add a quick check to highlight whether the entry is balancing. So we'll round each of these to 2, and we'll add our conditional formatting, so green if true, and red if false. So now if something is off, for example, if we temporarily break the long-term liability debit, you'll be able to see that very clearly and very quickly. And that's it for our periodic subsequent accounting. We've now completed all 5 steps to account for our equipment lease. And if we need to update our reporting date, let's just do that really quick as an example. If we change this to 1/31/26, the next reporting date, you'll see our entry will update automatically for any month we need. Now we will run into an issue for the last 12 months of our lease. If I update to January 2028, as we would expect, our long-term liability is 0. And at this point, we're only reducing our current liability. So our current liability is presenting as a negative credit. We could maybe work on that, but I'm not sure it's worth it. I think this is fine. If we see a negative credit or a negative debit, we simply know to record it in our accounting system as the opposite. If you want to set up some conditional work to present this in column H as a debit when you need to, and in column I as a credit when you need to, that's totally fine. For me, I think this is good enough. It tells us all the information we need to enter into our accounting system. And if we see the negative, like I said, we'll just know to flip it from a credit to a debit or vice versa. And speaking of, let's go record this now for our lease at Precision Industrial for December 2025. So we'll update this back to December 31st. So here in our accounting system, let's just remind ourselves that on December 1st, 2025, the lease commencement date, we made our initial measurement opening journal entry. And after we did so, our equipment right of use asset balance was $189,649. Our current equipment lease liability balance is $56,132. And our long-term equipment lease liability balance is $123,518. So now let's make our entries for our lease in December 2025. The first thing we'll do is make our lease payment entry, as though we're acting as the accounts payable team. So let's assume we remit payment on December 29th. And to do so, we'll debit our ASC 842 clearing account, and the payment amount is $5,500, and we'll credit our checking account for the same amount. And if we save and close this, you can see now our balance sheet is reflecting that $5,500 in our ASC 842 clearing account. So we need to clear that. Let's assume now we're on our accounting team and in the middle of our December month-end close process. So we need to make our ASC 842 entry. This will be as of December 31st, 2025. We know we'll credit our clearing account for $5,500. Then if we go look at our journal entry, we'll debit our finance lease interest expense for $972.09. Then we will credit our current equipment lease liability for $453.73 and debit our long-term equipment lease liability for $4,981.64. Then the last thing we need to handle is the amortization of our right of use asset, and that will be for $5,268.03. So we'll debit our finance lease amortization expense for that amount and credit our accumulated amortization for the equipment right of use asset. Now if we save and close this, you can see on our balance sheet, first we've cleared our ASC 842 clearing account to 0, just as we expect. Our equipment right of use asset net of accumulated amortization is now $184,381. And if we look at our lease schedule, as of December 31st, 2025, sure enough, we're matching our ending ROU asset balance. Then for our liabilities, our current equipment lease liability is now $56,585. and our long-term equipment lease liability is now $118,536, both of which match the balances shown on our lease schedule. The long-term balance is off by 1 penny. This is just because in our workbook we're not rounding at all. Obviously that difference is trivial and immaterial. Then on our P&L we would expect to have interest expense of $972.09 and amortization expense of $5,268. And if we just confirm that, in December of 2025, here in our other expenses, sure enough we have our finance lease amortization expense of $5,268.03 and our finance lease interest expense of $972.09, both of which contributed to our other expenses for the month and ultimately our net loss of $89,645. And now you can see just how quickly and efficiently we'll be able to record our lease accounting each month. Simply update the reporting date and we'll have all the information we need to record our ASC 842 periodic subsequent accounting. And now we can turn to an operating lease, where we'll be able to reuse a vast majority of the work we've completed here. But remember that the amortization of the right-of-use asset will be handled a little differently under that classification. So let's start that in the next episode.